Hey YouTube, what's going on? Welcome back to Calvin Lim Investing. As usual, I'm your host Calvin, and today we're going to be going over a couple of pretty key things when looking at investing. So far a lot of my videos are more on the trading side, and today we're going to look at a couple of key things of fundamental analysis when becoming an investor and how to identify which companies are going to be geared towards long-term success. With that being said, before we get down to the video, I am not a financial expert, so please contact an expert or advisor before you plan on investing. All right, so let's get down to it. So fundamental analysis involves looking at the company, their balance sheet, their growth, to really identify whether you should be this company is providing value in the long run, and sort of what and allows you to invest on the speculation that this company will continue to grow. Fundamental analysis is more important when it comes to investing than trading, because trading you are looking at momentum. So with that being said, couple of key things that a lot of people look for, or a lot of investors and big firms, even Buffett himself, look for, is cash flow and return on assets, and also return on investment. You obviously want a company that's generating positive cash flow, which means that they're actually making a profit. And remember, profit is going to be revenue minus expenses. The one field where we don't see as much positive cash flow is going to be in the medical field and medical sector. As a lot of companies are investing heavily into R&D, the expenditure often exceeds the income until the company has sort of solidified its ground and really developed a well-rounded product. So we're going to take a look at a couple of companies and kind of go through how I perceive fundamental analysis and how I decide or look for value in a company in long-term investing. Although I do trade, I have a separate account for long-term investing. This account, I pick up a bunch of either larger cap stocks or growth, a couple of dividends, and as a long-term investor, I really look at these fundamentals, when deciding whether I should keep this company or add this company into my portfolio. So we're going to start by looking at one of my favorites. This is going to be Square. So Square, led by Jack Dorsey, has grown an insane amount since the beginning of 2020. You can see at the March lows, at the height of the pandemic, Square was only $38 a share. Right now, it's $276. This is about more than almost 8 times. The company has more than 8x in a relatively short time period. So let's go look at their financials. I like to look at Yahoo Finance for a quick glance before doing a really deep dive or going to, like, say, E-Trade and really seeing the year over year. Yahoo Finance provides probably a pretty good outlook. It gives you the last 3 years. So as you can see, the company has definitely seen their revenue increase at an astounding rate. I think this should be in billions. So, it was at 2.2 billion, about 3.3, 4.7, and 2020 should be coming out in 2 weeks, and we'll get a better idea. But I do believe that we can check back later, but 2020 is going to be a huge jump from this number, and that kind of tells you, hey, at the rate it's increasing, it's definitely grabbing up market share. It's definitely seeing year over year growth, YOY growth. The next thing is their profit. So remember, profit is going to be revenue minus expenses. You can see that revenue minus expenses equals the gross profit. Well, the cost of revenue minus total revenue is going to equal gross profit. There's a couple of other costs when it's added. You can see this as well. The profit has increased every year. It was about 800 million to 1.3 billion to almost 1.9 billion. Every year the company is getting more and more profitable, and that's a good sign for any company that's growing, that they're achieving increasing profitability. All right, the next off would be, let's see, if it's here, we don't necessarily see it here, so let's see if it's on the balance sheet. The total debt. So you can see the company was about 358 million, I believe, in debt, about a billion, about 1 billion. You can see as a company achieves profitability and has seen revenue grow, they tack on less and less debt. All right, we can also look at Google. We're going to look at Square investment into R&D. Let's see. All right, let's take a look at this article. So let's see, when did this is a bit outdated. Let's go to something a little newer. Let's see. Okay. So we can see that, Square is putting in a lot of money into R&D. You can see this is from ycharts.com. You can see that there's an exponential, or that's not an exponential, but a steep increase of investment into R&D, which tells you, hey, the company is continuously seeking to innovate. They're looking to continually advance their products versus maybe staying stagnant and being happy with what they already have. They're constantly trying to offer more services, improve their platform, and in the case of Square, the company is trying to vertically integrate. It's trying to offer you everything from banking, investing, peer-to-peer lending, small business. It's trying to grab up a little bit of everything, which is known as vertical integration. So these factors kind of have me pretty bullish on Square. I've added shares over time, and I'm very, very positive about where the company's headed. All right, so let's look at another company as an example, just to get a little bit of a different idea. Let's look at my all-time favorite. This is going to be Apple. So Apple has shown pretty strong financials. 2020 is out already. Excuse me. You can see that its revenue has let's see if I can expand it a little bit. All right, so Apple has let's see, Apple's revenue has increased, year over year. Maybe not as dramatic or as astounding as you would hope, but there is, from 2019 to 2020, there was a $15 billion increase, right? That's definitely pretty darn amazing. Maybe just in 2017, they're only at 230 billion. So, there has been pretty steady growth. The profit, other than a little mishap in 2019, has continued to increase. The expenses has continued to increase, which is also a sign that, Apple is continuously spending money. But I don't know if the astounding rate of this expenses are towards marketing. I feel like a lot of their extra expenses these days are geared towards R&D. Apple's trying to make small changes to their product, but like some of these changes you might not really expect, but they definitely have a profound impact on consumers. So you can see that Apple's grown year over year. Their expenses are increasing slightly, kind of in line, but the most important number is their profitability is increasing, their revenue is increasing. Let's see, let's look at their balance sheet. So Their debt is about 112, total debt is 112 billion. This could also mean something to do with, I believe, well, I guess their debt, has increased slightly over time, but it's still pretty low compared to what it was, or it's still a lot lower than what it was in 2017. So decreasing debt, that's a pretty solid sign. And then let's look at their cash flow, their free cash flow. They got about, quite a bit of money just sitting around. They have about $71 billion of free cash, and that is about maybe 4 to 5 lifts, a couple of Beyond Meats. So looking at this, you can see that, hey, Apple's growing, Square is growing. Both companies have seen increases in revenue, increases in profit, limited increases in debt. As with Square, you can see an increase in R&D investment. That tells you that the company is continuously seeking to improve and striving for innovation. And last of all, something that I look at when analyzing companies is not going to be found in any data set. It's going to be how the company impacts everyday life. I'm a strong believer in investing in companies that change lives and impact many lives, and I think that's a pretty sound strategy. You look at Apple, look at Square, they reach and impact a lot of people, which is why I think they have potential to do well in the future. Same with Amazon, Google, Netflix, Disney. I believe that companies that are able to ingrain themselves in everyday life have a higher potential to succeed, especially in the tech sector. In the medical sector, it's a little bit different. I don't really look at sort of their balance sheets or their income statements because most of the time I know a lot of companies are still working towards getting FDA approval or launching new products. So in another video, I'll go through how I look at medical and biotech companies, but for now, this is sort of my method when I'm looking at like stable tech and maybe retail companies. So thank you guys so much for tuning in today. And if you guys have a chance, please go down, hit the subscribe button. I appreciate all the support, and I hope to hear from you guys.